Ready? Welcome. Thank you for joining us today for the HHC Capital Corporation semi-annual board meeting. Today's meeting is officially called to order. For the record, please note Erin Kelly is representing Ann Williams Isom, Karen St. Hilaire is representing Wally Wasau Park, and Dr. Sahira McNatt is representing Dr. Michelle Morse, and Dr. William Fisher is representing Dr. Jean Wright. Dr. Fisher does not. Okay. All in a voting capacity. Next on the agenda is the adoption of the minutes for the HHC Capital Corporation semi-annual meeting held on September 26, 2024. Are there any questions, comments, or suggested changes? May I have a motion to adopt these minutes?
So moved.
Second?
Second.
All those in favor, please say yes.
Yes.
Any opposed?
No.
Great. Great. Well, the minutes are adopted. So I will now turn the agenda over to Linda DeHart, Vice President of HHC's Finance Corporate Reimbursement Division, to provide an update.
Thank you. So I'm here with our debt finance team, and we are joined by our Office of Facilities Development partners, Minji Indar and Anikwa Brown. Our finance team includes Tom Tran, who you've met. We have a new member who will be supporting Tom, Claudia Chiaro. So we welcome her. And because it may be her last CapCorp meeting with us, I want to recognize that Pauline Locke will be retiring later this year. And we thank her for her many, many years of service.
Thank you.
Thank you, Pauline. We'll miss you and good luck and great work on managing the portfolio.
Thank you. So I normally start these meetings by reminding everyone the purpose of the Capital Corporation, which was created as part of the security structure for our system bonds. The Capital Corporation receives all of the patient care revenue as a pledge against to support our bonds debt service, and is released after debt service has been satisfied to us for operations. Related to that, I want to advise the board that we have gone through a formal process to recognize the Capital Corporation as what's known as a chain home office with Medicare. It just sort of formally recognizes that relationship, that the Capital Corporation is authorized to receive our patient care revenues from Medicare. So that was an administrative step that just eases some other processes for us. So we wanted to make you aware.
I'm sorry, Linda, it was a change in...
It's creating a chain home office that sort of formally associates the Capital Corporation with the providers under the system. So similarly, we've had the central office in the main body of health and hospitals is recognized as a home office that allows us to associate the cost incurred in central office with the facilities. So this just formally does that same kind of association for the revenue collected by Capital Corporation.
Okay. Thank you.
With that, I'm going to turn it over to Tom to take us through the presentation.
Thank you, Linda. Hello, everyone. So turning to page 1, this is really illustrating the outstanding bond portfolio that has been utilized under the H&H Capital Corp. As you can see on the pie charts on the right there, currently outstanding is roughly a little bit over $400 million. We are reporting the information and update you on this meeting is as of December 31st, 2024. So the split between the $400 million is $112 million related to the variable rate bonds, and then the balance of the $295 is the tax-exempt fixed rate outstanding bond. Splitting down a little bit further, the variable rates are supported by, again, letter of credit by TD Bank and JP Morgan. And then for the letter of credit TD Bank, that OC is currently expiring in September 3rd, 2027. And then for the JP Morgan one, it's expiring in February of 2026. So there's not much change there in terms of bond outstanding. However, there were two activities that occurred, one in October and November, that related to the rating actions that was taken by S&P. S&P downgrade the TD Bank by one notch, going from a A1 plus to an A1, and then the other rating action on JP Morgan, which is also an upgrade actually for JP Morgan, going the other way from an A1 to an A1 plus. We should note here that even though there was a rating actions for the two letter of credit provider, there was no, at least not noticeable that we can tell, that was any particular unusual trading activity for our outstanding bond into 2008 bonds for the variable rate. So as you can see, there's some historical data point for our variable rate bond. For the second quarter FY 2025, the rate was 317 on December 25th, which is basically the last week in the December 24. The average weekly rate for the entire 2024 was roughly 3.34. And then the latest weekly reset as of the print of this presentation was 3.02 on 219 or 25. And then for this particular week, the rate actually dropped down to 183. And again, those rates we're going to speak about on the next slide. It's really related to the market driven kind of activity, not so much of the particular rating actions that took place that S&P did back in October or November of 2024. And then the
Could I
last
just ask one question on the bank ratings? Do we have a minimum rating for what we can use for an LOC? Is it?
Oh, in terms of the threshold triggered? No. Yeah, I mean, those two rating actions, again, is related to the bank itself, and it was really affected by short-term rating of our bonds there. Okay, moving on to the second slide, which is an illustrations of the sort of interest rate volatility for our variable rate bonds, 2008 series since inceptions. The two lines is illustrating there. The y-axis on the left is related to the rate on the bond, the blue line on the bottom. And then the orange one on top is really related to the y-axis on the right, which is representing the spread to SIFMA, which is an index that we use on tax-exempt paper, which is normal for our municipal industry. Again, we also like to point out here on this slide the volatility that you see on the right there. There's a lot of sort of, I always describe this as a sort of a heart rate monitor, but it's really heart rate monitor, not so much on H&H, but rather really reflection of the market itself. Again, that volatility has been so really started somewhere in, I guess, 2022. It's been going up and down really based on market volatility, range from the FOMC rating hike actions to geopolitical matters, elections, tariff, immigrations, to inflow and outflow of the money market funds. So a lot of technical kind of driven data here that sort of drive that volatility, and it's not so much relating to anything bad happening with H&H. Okay, so going on page 3, a little bit of a breakdown of our portfolio. We're currently rated by Moody's of AA3, S&P an A+, and Fitch an AA-. As you can see there, our table on the right, it's really our outstanding portfolio has really come down quite a bit. Since 1993, when we established this sort of resolution that was issued under H&H Capital Corp, we have issued over $3.33 billion there, including refunding, that allow us to capture approximately $145 million over the life of our financing program. And it really dwindled down between these two series, one variable rate and one fixed rate. And then for the bar graph, which is trying to illustrate some of the debt service currently outstanding between these two series, And you see there the aggregate debt service, the bar graph on the bottom left corner. It's pretty level all the way to 2030. Then we're going to have a drop off in 2031, and then further drop off, and then have a constant level debt service thereafter. And then the two bar graph is give you a little bit more granular debt service between the fixed rate and the variable rate. Again, same pattern, sort of level off for the next couple of years, and then the drop off after 31. Going on slide 4, this is a little bit away from the bond itself, but it's really related to the construction fund currently outstanding. We issue a 2020 series back in 2020, closing 21, was roughly $100 million of bond proceed coming out of that issues. And since that time, we have sort of drew down roughly $89 million there, with the balance of $14 million. And then further breakdown on the table below, we're illustrating how we come about of that $14 million balance. As you can see, the split between the encumbrance and the unencumbered between $8 million and $6 million. Okay, going on next slide, on slide number 5. This one gives you a little bit more descriptive of that drawdown. Again, the total drawdown is roughly $91 million total spent through December 2024. Equipment basically was completed in December 22 with a total project spending of $22 million. And the balance really now sit in the infrastructure program, where roughly $12.4 million remain unspent. And then we're about spending $4.8 million from July of 24 to December 24, comparing to the project spending of $3.8 million. The remaining fund that we're currently projecting at this point is really through to June of 2026. There is a substantial completion for 4 remaining projects between, I guess, by June of 2025. And then, of course, the closeout period for additional 12 months for that remaining $7 million. Okay, so on the next slide, give you a little bit more illustrations of how we spent those $100 million spent, where they went. So on the bar graph on the left, you can see, a chunk of that, I guess, the first 3 that really go to Belleville, Harlem, and Lincoln, which is related to the facility breakdown. And then on the right, it breaks down between the infrastructure and equipment and IT there on the pie charts, how we break that down of that $100 million spent. Okay, on the next slide, this is an updated projected funded cash flows, showing the bar graph of actual spending versus the revised cash flow as of December of 24. Again, that line is really based on the descriptions on the previous slides. Okay, on the last slide, it's really now moving away from our bond program a little bit. This is related to the equipment loan that we're currently outstanding, which is with JP Morgan. So as of December 31st, 24, we have a remaining outstanding of $34 million. Again, this was a fix out that we did now, with an interest rate of 2.64%. With that, that's completed my presentations. Happy to take any questions.
Any questions from any board members? No. Great. Well, thank you for the presentation. I think everything looks to be moving smoothly as we spend down the 2020 proceeds, and hopefully, I know you guys have been working on some other capital planning, so the debt management side of it has been really great to put us in position to do that. So thank you. Any other old business or new business from members to come before the board? If there's no further business, this meeting's adjourned.